Alrighty, guys, I think we are good now. For some reason, I think we had some technical difficulties. So if you guys can actually go on and I'm going to resend the link here to the group chat. But if you guys can hear me, make sure you guys tell me. We had some trouble. I don't know exactly what was going on with it. It was saying that I was logged into my podcast account, which I do not, use for a live stream. That's what threw this whole thing off here. But if you guys can hear me, make sure you guys can just throw a comment and just say we are good to go, or it's jacked up again. Because I'm very kind of concerned here. All right, so I think we are good to go. All right, so we're going to talk about some of the top stocks here to keep on watch. So starting off with the top one here that I'm keeping on watch is Square, ticker symbol SQ. Now, the thing about this is it does have some overall resistance here at around $194 and some more resistance here at 200. So basic analysis will tell you that hundreds and fifties act as very, very strong support or resistance lines. So really what that means is hundreds, so like 200, 300, 400, they act as very strong supports or resistance lines. So the 200 is a resistance for the stock here. And then if you look all the way down in here, we have some support here at 150. So that's pretty much what I mean. So we get buying pressure at the 150 mark, selling pressure at the 200 mark. So just by knowing that, you guys can make $50 a share off basic support and resistance. So this one here, it definitely bounced from 150, hit that 200, sold off here. Now, right now, it's just kind of in this consolidation zone, really using these 9 and 20 moving average lines as some overall support. So that's what I'm really looking for. If it can use it as support, setting your stops right below it, you can risk, $10 to make a possible 20. That'd be a good risk reward ratio here. So let me go ahead and just check a couple of things on the stream side. Okay, so it looks like we are good in that sense. Okay, I'm just making sure that we are good to go. All right, another one here that I want to talk about is NEO. I did call this stock out actually I've been calling this stock out for quite some time now. But this one here does have some overall resistance at 30 and 45. Sold off here, hit this moving average line and got some buying pressure. Now, what are my thoughts on this company? I do think right now we are temporarily a little overvalued. That's just my opinion. I still think the stock could go from 41 to 45, but the risk level is pretty high. The reason, really what I mean by that is anytime that a stock like this continues to go up in value, the risk goes up. So I've been into this position at around $11 a share, and so I'm up quite a bit. And so there's no sense of averaging in or averaging out. I'm just really holding it for the long term, and I think that's a better approach with this one here. So another thing you can do is dollar cost averaging for this, and that would work very, very well. All right, so you want to look at Alibaba. I believe it's So Baba, that's right. I always forget the tickers here. So Baba, just by looking at it, you guys can see we had that temporary sell-off, found some support here at the lows at $169, broke out of this old resistance, continue to rally up. Right now, there is some resistance here at 319. Where do I see the stock being at the end of the year? So for that, I think that this one, if we just continue the overall trend, which we always hope to happen, I could definitely see this stock coming back up to highs at 320 to about 340. Maybe not by the end of this year, by probably mid next year, coming back up to highs. by the end of this year, because we were, a month or two out from the end of the year, possibly coming back up to 300. For this, I want to see what happens here if we get some more selling pressure, because if it can come in contact with this 200 moving average line, I could guarantee it will use it as support, because you guys can see it's used it all the time. It came in contact here, and we got buying pressure. So I do think we're probably going to get some buying pressure before then, but I would really kind of estimate around $300 if we get some more buyers back into this, which I think we should. Another thing here, just by looking at it, basic resistance here at 300, kind of like I was saying, hundreds and 50s act as very, very strong supports or resistance. So that 300 is going to act as some overall resistance for this stock here. Another thing here is it does look like there is some old support, so that's definitely helpful for buyers too. You guys can see that we did get buying pressure in this price zone here. So that's one that honestly looks pretty strong here. At 268, set your stops here below 260. You risk $8 for the stock to come back up to 300. So you risk $8 to make 40. That's what I would do. Or what you could do is just hold it for the long term. I understand that Alibaba is like the Amazon of China, and so I think that the stock could continue to grow in value as well. So that is something to understand too, is this is a good long-term stock here. But another one that I want to talk about is HD. This is Home Depot. Home Depot has just been kind of consolidating lately. So meaning we know the basic resistance, we know the basic supports. You guys can see that very, very, very clearly when I zoom in on it. So what I would do is I would just set some overall alerts here at the 265 area. So let's just go ahead and do that at or below. So now I know that anytime the stock comes in contact with 260, let's bring it up to about 266 here, 267. Now I know anytime the stock comes in contact with it, we're going to get some buying pressure. You guys can see we did get some major sell-off here. I think it's just a matter of time before it comes back up to these highs here. That's just my opinion. But I definitely think this is a good long-term stock to keep on watch too. Home Depot, very good one. Solid dividend payer. Has outperformed all of the major indexes. It's just a good stock here. You guys can look at the 3-year chart. The support and resistance is clearly drawn out there. Where do I see Home Depot being at the end of the year? So like I was saying, the year is about 2 months away, a little less than 2 months away. So there's a couple things that can happen, especially for one like this. I think if we get some buying pressure coming into this, we could have what you call a resistant breakout or a support sell-off. So it's just deciding which one it is. So I think that the overall momentum of this stock is up. So I do think we'll probably get a resistant breakout here from 292. Another thing here too is this is a solid one to hold for the long term. I would not be surprised if this stock comes back up to $300 a share. I would not be surprised at all. We're really just consolidating here. We're waiting on the moving average lines to come up and pick up some support for the stock. And I do think that's what we're going to happen. I do think that's what's going to happen with Home Depot here. I'm heavily invested in this company. I've been really just using dollar cost averaging for this one. So Lowe's is a good one too. I think, what is it? Low, I think the ticker is. Yeah, Lowe's. This is a dividend king here. You guys can see we did get that sell off to $60. This one here used to use this 90 moving average line as some overall support here. Right now we're kind of on a short-term downward trend just by looking at this chart here, but basic resistance is 182, support is 150, 158 here, kind of what it's at now, 150. I'd be confident getting into the stock at around $150 a share. And same thing, very similar to Home Depot. This is a good long-term stock. These stocks you guys can swing trade very, very easily because the stocks play out better for your swing trades with blue chip stocks. So I do think that this one here, let's draw them out. So we have that resistance. So if you're going to end up short selling, this is where you want the price at. If you're going to buy into it, I'd go around 153. And by the end of this year, by the end of 2020, I see this stock kind of being at around 167 to 170 per share. So yeah, we could be a little temporary undervalued. And another thing here too is these stocks, there's so much demand for home improvement right now. It's absolutely, it's crazy. So I do think that's something to understand too, is you could be getting some dividends. You can be getting some cash flow coming in and getting in on some undervalued stocks here. But this is definitely a good one to keep on watch here. A lot of people have been looking at this one lately, is Zoom. We did get some major sell-off here, and this was just because of this whole, the whole vaccine news really hurt this stock very, very hard. People have a mindset of, where is this company going to be at in the next 6 months? And, if we have a vaccine, there's no sense of doing work remote, school remote. And that's where Zoom makes a majority of their money. So I do think this one right now is too volatile for me for a long-term investment. But as a swing trade, let's go ahead and look at the 180-day chart here. So for a swing trade here, we have that resistance here. Some support, it would be down here. You guys can see we got buying pressure right in there. We got some more buying pressure in here. So, you guys can see it just picked up that old support. Now it's rallying up. So I do think right now it's kind of hard to say if there's an opportunity here. I do think that we could definitely see the stock go from 400 to about 415 to 425. But I just think the risk level for this is too high for me. How do you see Snowflake doing their earnings? So Snowflake, let's pull it up here. So this one here is just kind of trading sideways. And for their earnings, I bet you it's probably pretty decent. A lot of data companies have been doing very well due to this kind of whole pandemic and recession we're in. Well, not recession anymore, but pandemic, because people are staying in, and data is growing at like 17%. And that's where Snowflake falls into. They're a data warehouse company. So I definitely think that this stock here does have a ton of long-term potential. I'm very, very invested into this one too. But this one here, you have to understand is this stock has risk. This stock carries more risk than, a company like Apple does, than a company like Microsoft or a blue chip stock here. This stock just IPO'd a couple of weeks ago, and it's just kind of consolidating, which isn't that bad, let me tell you, because if you compare this stock to like Salesforce, a company like that, they're both kind of data in that data realm. I think that this is a perfect opportunity, and definitely a ton of long-term potential with this one here. Support here at around $234, resistance here at around 270. That's my mindset going into this one. Disney, so that's DIS. Disney here, I do think Disney carries a lot of potential, maybe a little overvalued on the short term. You guys can see we had this huge run up. Really was trading at $127, hit highs at $147. But Disney's a company you don't really have to worry about it in the long term. That's where I see it. Disney is pretty much a media warehouse. They have a ton of companies. They own Lucasfilms, which is Star Wars. They own Marvel. They own Lifetime, ESPN, a lot of them. And so I do think Disney is going to carry a lot of momentum here. It's just they got hit very, very hard because of their cruise lines and their resorts. And so I do think right now with them starting to open up, and if we get that vaccine out, Disney is going to come back up in value easily. Do I think it's a little overvalued right now? Probably. I do think we'll probably get some sell-off here to about 134 to 135 in that area. But definitely one to keep on watch here, though, for sure. Another thing that would be really nice for Disney too is to have their dividends come out. I know that is a very, very strong thing when a company reannounces their dividend. And so I think once Walt Disney or Disney announces that, that's going to be a very, very positive thing for this company. And I bet you will have more explosion and buying pressure. So you guys want to look at this one here. This is the company that is working on, I can't remember the ticker. VIZ. There we go. All right. So you guys can see that we had this huge explosion just because this company is working, or pretty much did come out and state that they did make a vaccine. It's about 90% effective. So basic resistance here at 39, or you can even mark out 42, but I think that was just a huge hype up right there because kind of they announced the vaccine for the COVID. So where do I think a fair price for this stock is? I honestly think it's probably about $37 a share. This stock really doesn't move a whole lot. A lot of people invest in this company because it's a value stock. You get solid dividend cash flow and it does pretty decent in a recession. This company is a company that does good in recessions and decent in bull markets. That's why a lot of people invest in it. It's a dividend, I believe it's a dividend aristocrat. I don't know if it's a dividend king, but I would hop into this at around $37 a share. The reason why I say that is because if they get that vaccine out, that is going to bring in more revenue, more traction to the company. People are going to invest, and I do think that's going to make the stock more valuable. And we could easily see it come back up to $42 a share again. It just, even with the COVID news, it only went up, $5 or $6 per share. And you would think that if a stock announced that it would ride, 30, 40, 50%. But this is a value stock. Doesn't move a whole lot. There's a ton of shares out there, so it needs a lot of volume to move. So for a swing trade, definitely. But overall, for a long-term investment, 37 to about, under 35 for sure. I would hop into this all day. Resistance here at 34. So you guys can see it does not move a whole lot. What is a good entry point on Disney? I would hop in, if we're just going to do basic, technical analysis here, I would say 136 is a fair price. I've been investing into this company under 100. I went heavy under 100 because I knew it was going to come back up. But if you just look at, basic, analysis, old resistance has tendency to act as new support. So you guys can see we had this resistance. Okay, we had some sell off here. So now when this stock comes in contact with it, we're going to have a couple of things. We're going to have this overall 20 moving average line right on this price point, okay? So we're going to have this price point here, and then we're going to come in contact with the moving average line and this old resistance, which acts as new support. So that's where I would enter. I would enter under 136. That's just me. But all right. Okay, so that's just, I'm sorry, I'm trying to keep up with the comments here. Okay, so ESTY. Whoops, wait, ETSY. All right, so we got Etsy here. Etsy did extremely well because of the kind of world we're living in where we can't go out and shop. It's up 8% just today. So basic support, basic resistance here. Support, at around $107. So let's mark out that. We have some more support here at 120. Resistance here at 150. I would classify that at 150. So kind of like I was saying, hundreds and 50s act as very, very strong supports or resistance. So this being a resistance line, that does not surprise me at that 150 area. Right now we are on almost like a temporary sell-off. This was just because of the whole news came out and people got worried that Etsy was going to go down in value because online shopping was going to come to a halt. But guys, realistically, the vaccine is going to take still a couple of months, and these companies are going to continue to make a ton of money. So Etsy, looking at it here, it's at $129 a share. Support here at 120. You know, it's kind of in that middle ground. But if you hopped into it, I do think there's definitely room from 129 if it just comes back up to an old resistance at, 146. So you could possibly risk $9 to $10 to make another 15. So I don't know if that's something you guys would be interested in, but still we are on kind of a short-term downward trend in the stock price. So, sellers are starting to, buyers are hopping out of this position. So it's something to understand too. All right. Where are we? Oh, tomorrow is Disney's earnings. I bet you they'll probably do okay, just because their parks are starting to open up again. And their Disney Prime is doing very, very well, or Disney Plus, is doing very, very well. So stuff like that. I bet you they'll do pretty decent. Okay. Hello, I recently saw your swing trading video and used the Finvez to find stocks. Can you take a look at China Recycling Energy Corporation? Okay, so we can go ahead and find it. I don't know if you have the stock ticker, that really, really helps me out, but I'll just look it up. China Recycling Energy Corp, right here. Okay, so this one here definitely is a previous runner. So just by judging the stock here, this stock has tendencies to run, okay? Oh, you put it in. I'm sorry, I didn't even see that. Okay. So this stock here, I don't know if that's my phone. So this stock here has previous tendencies to run here. You guys can see this huge buying pressure. You guys can see this huge wick. Jeez, hold on. On my phone. One sec, guys. Stay with me. Sorry, guys. My nephew hid my phone, and I had an alert set for the live stream to go off at 2. Okay, I'm sorry. I know, I hate that alarm too. But all right, I'm sorry. My nephew's here, and he hit it. But all right, so we have CREG. Basic support, basic resistance. So you guys can see these huge wicks here. These really classify runners. So during this day, this stock went from $2 all the way to $7.40. Right in here, the stock went from $2.85 to $3.72. This stock went from $3 to $5.30. So now looking at the stock here, you guys can see it really has a tendency to hug this 200 moving average line. So when the stock is below it, it uses it as some overall resistance. So the sellers are really in control of this stock here. But once it breaks out of it, you guys can see we get buying pressure. And then it uses it as support. But when it's under, it uses it as resistance. So I do think with it being over right now, what I would do if you guys were looking to swing trade something like this, hop in. You could even hop in right now, small position, set your stops very tight, at like $3.08, $3.05, or even $3, depending on what you want to do. So you're going to risk 30 cents. It's going to be a lot, but you have a possible break to go back up to like 377. Another thing that you could do is something where you just buy and hold, okay? Because we are still on a short-term upward trend. So buyers are in control of this stock right now. So I do think that this stock could definitely come up in value to at least probably 375. I would not be surprised if it does that. Set your stops very tight under the 200 moving average line, and you'll be good. What about airline stocks? Will they go up or down? Okay. So let's just pull up Delta, because I do think Delta is probably the better airline stock. Delta was making money before everything was going on. You guys can see, before the whole recession, Delta had a nice upward trend. Company was doing very well. got hit, sold off here to $17 per share. Okay. Now, you always have to ask yourself this question. If you guys are going to swing trade something like this, right now it's hitting that old resistance. So there's definitely short-term sell-off. I could probably guarantee it. Yeah, stock's down 4% just because it's hitting that old resistance. Okay. So now we know that's the resistance, but you have to ask yourself, okay, so let's just say in 2019, the company made, let's just say $5 million just for an example, okay? And then in 2020, their revenue shut down, okay? And they only made $1 million. So they're down $4 million. Now in 2021, the stock, they start making $5 million again. A lot of people would think, well, the stock price will be the same. But you have to ask yourself, during 2020, how much long-term debt did they take on? How much supply and how much material did they sell? How many employees did they lay off? All this stuff is factors for a stock price. So I do think Delta is going to do probably very well. I would not be surprised if the stock comes back up to this 200 moving average line in the next year and a half. I would not be surprised. But a company like United Airlines, I believe UAL, company that was doing pretty decent, not an upward trend, just really consolidated here, sold off. This one here probably won't do as well. It's going to take a longer time to recover. Okay. Another one here, AAL. Look at this. Okay. So this stock was already losing money, losing value. The whole pandemic hit, sold off. This stock's going to take a lot longer to recover if it ever recovers at all. So look at how much long-term debt. Use like macrotrends.com. You guys can look at all the company's financials and just make your picks off that. That's what I would do, and that's what I do when I look at my when I do fundamentals. So look at it's called macro trends. It's very good. All right, what means Snowflake getting IPOs? What word IPO in stock futures? So for Snowflake, we did look at this one, but let me see. I don't think I understand your question. Let me go just the yearly. All right, so what means Snowflake getting IPOs? So really when a company announces their IPO, it's just a internal public offering. It's just allowing the public to invest. There's multiple reasons why companies offer IPOs. The very first one and most common is they want to use investors' money to grow the business. Because when you are a private corporation, your business hits a certain threshold where they can't grow. They need more money to grow. And there's a couple options. As a private business, you can take on long-term debt to grow it, or you can just offer an IPO. There's multiple companies out there that aren't afraid to take on debt to grow their business. I mean, look at Subway. Does Subway have stock? No, but their company makes a lot of money, but they don't have, a publicly traded stock. But if you compare it to McDonald's wanted to grow a lot faster, so they wanted the public to invest. So it gives an incentive for an IPO because you can have more money, you can offer dividends, so you can have really a variety of people invest and you can share some of your profits. So a company like Snowflake, I do think they carry a lot of potential. It's a data warehouse company. Data is growing at like 17% a year. So it's definitely crazy. I'm pretty invested into this one here though. Basic support here at 230, resistance here at like 270 in that zone. Breaks out to 300. Like I said, hundreds and 50s act as very strong support and resistance. So that $300 is that overall resistance zone. So I do think that's something to understand, but yeah, that's what an IPO is, if that was your question. So if you guys have any questions, will Airbnb go public soon? What are your favorite websites to watch the market? So how I keep in tune with the market is honestly all on my phone. So I get alerts set almost every single day from a couple of apps. I have CNBC, I have Yahoo Finance, I have what else? Just the regular from your brokers. You can set up where you can get alerts when the stock goes up or down. I have what else? I have a lot, but will Airbnb go public soon? They did file their pre-IPO stuff. It's just a matter of getting how much the company's worth and having the SEC look at all the finances and a lot of stuff like that. So it takes time. You can't just instantly become an IPO. It takes some couple months of planning, figuring out what ticker you are. So let's do this is what? Oh my gosh, what is this one? Draftkings. So Draftkings here, you guys can see that it really likes to use this 200 moving average line as some overall support. So that's where I'd classify the support for this stock here is this 200 moving average line. Resistance here, of course, at $64. More resistance here at 56. Support here at 48. More resistance here at 45. You guys can see it. This is a very, very strong resistance here. You guys can see we did get multiple sell-offs. Boom, boom. Okay, so now I do think we'll probably get some sell-off here to probably $38 a share. It's just kind of in this consolidation zone. So I don't know where this one is or could go. I'm not a huge DraftKings guy. I don't know the finances that well, but I know that DraftKings and the sports betting is growing at a very, very rapid rate. We have companies like Penn, same kind of thing, exploded. I made a ton of swing trades off this stock here, but this stock has absolutely killed it. You could have bought this for $3.75 and sold it for $70. It's crazy. But yeah, this is Thinkorswim. This is a pretty good platform for overall looking at charts. That's really one of the main reasons why I love it so much is because it's commission free, no monthly fees or anything like that. It's a good platform. So how are you doing? I am doing fantastic. Every day learning something new. I did start journaling, keeping track of all my stocks here. Market Beat website publishes the analyst opinion about stocks. Do I believe in those? Analysis. They work to make earnings. Should we take them serious? I mean, yeah, you can what I kind of use, a lot of analysis for, like companies analysis. They'll have a buy zone, or I know on Yahoo Finance, they'll have a buy zone. Really, what these analysis do is they look at price to earnings compared to the price point it is now. They looked at the a lot of things, and they just strictly do it off of the fundamentals most of the time. So yeah, but just don't heavily invest in them. If a company's saying, oh, don't do it, and you see potential, of course, believe yourself over them. That's kind of what I always say to myself. So kind of take them a little serious, but at the same time, if you have a gut feeling, just always set your stops. All right, I have a question regarding to the Roth IRA. They say you are 18 and don't have a job and invest money that wasn't taxed. Can you still make money like post-taxed? So really what a Roth IRA is, it's a retirement account that you really can't withdraw money until you're like 55. And if you do, you get hit pretty hard on the taxes. They do take a little bit more than like a traditional account. So what I would do if you have a Roth IRA, just set up something streamlined where you don't have to worry about anything. And you can be 18 like you were saying, and you don't have to have a job to have a Roth IRA. You don't. Sign up with M1 Finance and get one tomorrow. Most of the time, if you have a free service, they're going to have a higher minimum. So I know in M1 Finance, it's like a $500 minimum. Save up a little bit. Vanguard is very good. Yes. I would look up the minimums and fees. If there's no fees, which I don't think they charge, it's good. I think I may have a Vanguard account. I don't know. Okay. Do you usually use Findes to do swing tradings? Can you make a detailed video on how you use? Okay. Yeah, I'll do one. It'll probably be. Let me check. I'll do one tomorrow. Let me write it down. Yeah, I'll do a Finves video tomorrow. I'll explain really all of my analysis, and I'll do a couple. I'll look at a couple scanners for you guys, so you're not just stuck with Finves. I'll find the best one for you guys. But I've been using Finves for a very long time, so it just works well for me. But yep. All right, so I think we're gonna cut it here, guys. Make sure you guys hit that like button because it really, really helps me out, to be honest with you, because more people can see it. If you have any questions, you guys can ask them. If you guys aren't signed up in the group chat here, let me invite some of you guys. Most of the time, you do have to be a member of, the course, but I don't really care. So you guys can sign up with that link there. Okay, can you talk about AI stocks, batteries, gold, charging stations? Okay, so you want me to pretty much talk. Okay, so AI stocks. AI stocks are going to be like companies that are like NVIDIA. These are going to be companies like Microsoft, Apple, stuff like that. You don't realize it, but those are AI stocks. Even Facebook is an AI stock, and that's why they've taken off in value. Same with Amazon. You might not realize it, but Amazon is an AI stock. They have artificial intelligence. But if you want like a super, super risky AI stock, I think I did make a video a couple weeks ago talking about some of them, but I like NVIDIA. I like blue chip stocks that are working in AI. I think that's a really cool sector. So look at like NVIDIA, Amazon, Apple, Microsoft, stuff like that. Batteries. So are you talking about like electric car companies like Tesla, NIO, stuff like that? Which would you recommend for non? I would recommend probably TD Ameritrade. Yeah, I would recommend TD Ameritrade. The reason I don't know much about these other ones. I know First Trade's pretty good, but TD Ameritrade's cool because you can have multiple platforms, multiple accounts. You can have a trading account. You can have a Roth IRA account. You can have a variety of things. And so I do think TD Ameritrade's great, and that's the one I would recommend. But okay, for electric cars, I would have, we can just, I think I probably do have a geez, whoops, hold on. I think I do have a watch list here, guys, of electric car stocks right here. All right, so let's just link these up real quick. Sorry. I should have gotten all this stuff ready before, but all right, so we got Tesla. These are some of the ones that I keep on watch here. Let's just close all this. All right, so we got Tesla. We have is Webull available in every country? I don't think so. Or in any country, I don't think it is. I think it's US. I don't know. I'm not sure. I've used Webull, but I don't use it that often. So these are the ones right here. NIO, MGA, Nikola. This stock got slammed, but you can basic support, basic resistance, make a little bit of money off some swing trades. And then right here, BMW. So, these are some that I definitely keep on watch. I don't know. They're pretty good. But as of charging stations, we have Plug. Plug's good. I know they're working with a lot of companies, to be honest. making charging stations for electric cars, for hydrogen cars. They're working with a lot of companies. But Plug Power is doing very, very well. You guys can, I'll just pull it up. You guys can see this explosion. Okay. Are you talking about... Oh, okay. Not to me. All right. But yeah, so go ahead, and if you guys, I'll post a... I don't read... like you. How can I learn technical analysis like you from you? All right. Hey, so go to my course. I'll use this code, guys, and you guys can get in for free. Okay. Anybody, I don't care. So code HBS for free learning. Just go to www.carterfarschool.com, and I have a whole segment on technical analysis. So you'll get in for free. Or if that doesn't work, or if the code expired, just send me a message on like Instagram or even in the group chat here, and we'll get you all situated. All right. But all right, guys. So that is it. I'm gonna hop off here. I hope you guys enjoyed it. I hope you guys learned something new. We'll see you tomorrow. Take care, guys.